Welcome to Task4Free Finance channel. Today, in this video, we're going to discuss financial options, an interesting and versatile investment tool that can help diversify our portfolio and maximize profits. In the world of finance, there's always uncertainty and risk, especially in times of economic crisis. But did you know that there's an investment method that can help you protect your portfolio and take advantage of market opportunities even in tough times? I'm talking about financial options. In this video, I'll explain what financial options are, how they work, and why they're one of the best investment tools in times of crisis. Discover how options can help minimize your investment risk, and how you can capitalize on market fluctuations to make gains. So get ready to learn and improve your financial skills with options. Financial options are investment contracts that provide the buyer with the right to purchase or sell an underlying asset at a predetermined price on or before a set date in the future. The asset can be a variety of things, such as stocks, bonds, commodities, or currencies. The right to purchase is called a call option, while the right to sell is referred to as a put option. The beauty of financial options lies in their flexibility, which allows investors to speculate on the future direction of the asset's price without having to actually buy or sell the asset itself. This means that investors can profit from the price movement of the asset, without owning the underlying asset outright. For instance, if an investor believes that a stock's price is going to increase in the future, they can purchase a call option to buy the stock at a predetermined price, and if their prediction is correct, they can make a profit by exercising the option. Similarly, if an investor thinks that a stock's price will decline, they can purchase a put option, and if the stock's price indeed falls, they can make a profit by selling the stock at a higher predetermined price. In essence, financial options provide investors with a way to leverage their investments and manage their risks in a volatile market. With options, investors can protect their portfolio from losses and maximize their potential gains. However, it's important to note that trading options involves risks, and investors must have a solid understanding of the risks involved before investing in them. Greater flexibility and diversification in investment. Financial options allow us to invest in a wide range of assets, from stocks and currencies to commodities and futures. Additionally, we can use various option strategies to adapt to different market scenarios and reduce our risk. Potential for significant profits with a relatively small investment. Financial options enable us to invest with a small initial capital and obtain much greater profits than we would with a direct investment in the underlying asset. Protection against potential market declines. If we anticipate a possible market decline, we can use put options to protect our portfolio and limit our losses. Possibility of earning money even in a sideways or bearish market. Unlike direct investment in stocks, financial options allow us to profit in both bullish and bearish markets, as well as in sideways or trendless markets. Use of option strategies to limit risks and increase profits. We can use different option strategies to reduce our risk, maximize our profits, and adapt to different market scenarios. Now that we know the advantages of financial options, it's important to note that there are also some drawbacks associated with this type of investment. They can be complex and expensive, and if the underlying asset doesn't move in the expected direction, investors could lose their entire investment. Additionally, options have expiration dates and can be susceptible to market volatility. Despite these disadvantages, financial options can still be a valuable tool for managing risks and maximizing profits in the financial market. The complexity of financial options is a significant disadvantage that can deter some investors from considering them. Financial options are complex contracts that may require an advanced understanding of the options market. The specific terms and concepts may be difficult for inexperienced investors to grasp. Complexity can lead to making wrong decisions and ultimately result in losses. Additionally, financial options may have multiple variables that can affect their value, such as the underlying asset price, market volatility, and expiration date. For investors who are not familiar with these variables, operating financial options can be overwhelming and difficult to handle. The expiration date of financial options is another significant disadvantage. Unlike stocks, which can be held for years, financial options have a specific expiration date at which the contract expires. This means that if the option is not exercised before the expiration date, the entire value of the option is lost. For investors hoping to make large long-term gains, financial options may not be a good option as the expiration date limits the amount of time they have to make a profit. Additionally, the expiration date can also limit short-term investment options, as most financial option contracts have a short-term expiration date. In summary, the expiration date can be a significant disadvantage for investors looking for flexibility and long-term investment options. Another significant disadvantage of investing in financial options is the need for specialized knowledge. Financial options are a complex type of investment that requires a deep understanding of financial markets and investment strategies. Without this specialized knowledge, it is easy to make costly mistakes that can lead to significant losses. Additionally, the language and terminology used in financial options can be confusing and difficult to understand for inexperienced investors. This means that investors who wish to invest in financial options must dedicate significant time and resources to acquire the training and knowledge necessary to make informed investment decisions. While the need for specialized knowledge is not necessarily an exclusive disadvantage of financial options, it is an important consideration for investors looking to diversify their portfolio and maximize their profits. Now that we have discussed both the advantages and disadvantages of investing in financial options, it is important to focus on specific strategies that investors can use to maximize their profits. In particular, the strategy of selling financial options has proven to be one of the most effective ways to generate income in the options market. Instead of buying options, the strategy of selling options involves selling options to receive a premium and generate passive income. This strategy takes advantage of statistical probability in our favor, as the majority of options expire without value. Although it may seem counterintuitive, the strategy of selling options can be a solid and secure investment strategy compared to buying options. It is important to note that, as with any other form of investment, specialized knowledge and skills are needed to properly implement these strategies and minimize associated risks. Selling options is a more effective strategy than buying options because the probability is in favor of the seller. By selling options, the investor receives a premium and assumes the obligation to buy or sell the underlying asset at a predetermined price on a future date. This strategy is similar to an insurance company where a premium is charged to cover risk. When selling options, statistics and analysis can be used to determine the risk and set the appropriate premium price. At Task4Free, we focus on selling options, using various strategies such as naked option selling, covered option selling, and credit spreads to maximize profits and minimize risks. Our goal is to generate regular and consistent income, protect our portfolio, and reduce volatility. In summary, selling options is one of the primary strategies we use to maximize profits and reduce risk in a changing and volatile market. At Task4Free, we focus primarily on selling options because we put statistics in our favor. We use various strategies such as naked option selling, covered option selling, and credit spread selling to maximize profits and minimize risks. By implementing these strategies, we aim to take advantage of statistical probability in our favor and reduce exposure to risks. Our goal is to generate regular and consistent income while protecting our portfolio and reducing volatility. In summary, selling options is the predominant strategy we use in our company to maximize profits and reduce risk in a changing and volatile market. Since we know that selling options is a more effective strategy than buying options, we will now list some of the options selling and delta-neutral strategies that can be useful for maximizing profits and minimizing risks. By applying these strategies, it is possible to leverage statistical probability to our advantage and reduce exposure to risk in a changing and volatile market. It is important to note that each strategy should be tailored and adjusted to the individual needs and goals of each investor. Some of them are naked puts, covered call, credit spreads, iron condors, butterfly spreads, calendar spreads, ratio spreads, diagonal spreads, and much more. On the other hand, it is important to understand the influence of certain factors on the price of options, which are known as Greeks. Greeks are measures that indicate how the option reacts to changes in different variables such as the price of the underlying asset, volatility, time, and interest rates. The main Greeks are delta, gamma, theta, and vega. Each one provides important information to evaluate and manage risk in option selling and can be used to adjust strategies based on market conditions. We will be studying them in upcoming videos. As we have seen, financial options are a useful and effective tool for investing in the stock market. Although they have their advantages and disadvantages, with adequate knowledge and a clear strategy, we can obtain significant benefits. It is important to remember that financial education and prudence are key to investing successfully. We hope this video has been useful to you and that you can apply this information to your future investments.